Hi everyone. The objective of the session today is to learn about vertical and horizontal analysis for the balance sheet and the income statement. So let's start. In the course material, we're going to the vertical and horizontal analysis. We'll start by looking at the balance sheet. Okay, what do we do? First of all, let's technically go over it. How do we turn a balance sheet into vertical analysis? We take the assets to be 100%, and then we convert every number as a percentage of the total assets. One more time, we turn the total assets to be 100%, and for example, the 8, we'll take 8 divided by 800 by the 810. That gives me the percentage of how much is the cash out of the total asset. And we do the same things for every account. Okay, let's take an example. We open the Excel, and here we go. If I want to know how many percentage are the 8 out of 810, it would be very simple, equal to 8 divided by 810, almost 1%, 0.99%. Sometimes we will do for the inventory in every account. For example, total current asset, how much is its percentage from the 810? We simply do the same things here, and instead of the 8, I'll just write here 30, and that will be the percentage of the current assets of the total assets. We do the same things for every number here. For the second year, we use the total assets for that year as the 100%. So then we will divide 18 divided by 816 will give me the ratio, how much is the percentage of cash out of the total assets. We do the same things for every account here. Some things we do about the current liabilities and long-term liabilities. For example, how much it is 32 out of the total assets, or total liabilities plus equity is equal to the total assets. So if I will take the same things, copy it here, and just change the number, I can go here and do 32, how much it is out of 810. That's almost 4%. That will be the percentage of current liabilities out of the total assets. We do the same things for every account here, and let's see how it looks like. If we go here, we get all the numbers. For example, remember we got that that's almost 1% out of the total assets. Same things about 3.95, that was the current liabilities as a percentage of the total assets. So we turned everything into a percentage of the total assets. Why do we want to do that? And there's two reasons for doing that. One, if I want to compare one year to another, I can tell that the cash went up this year. But at the same time, also the assets went up. The question is proportionately the cash went up more than the total assets. So if we look at those two numbers, 8 divided by 810, 18 divided by 816, what do we discover? We discovered that in the first year, we had the cash 1% almost. On the other hand, in the second year, it becomes to be 2.21. That means proportion to the total assets, I am holding twice as much cash, okay? Not only the cash went up, but it went even in a higher rate than the total assets did. That's one reason why we do that. Secondly, if we want to compare our own company, not only between different years, we want to compare our company to another company. But the other company might be a bigger company, and the total assets will be much bigger, or to a smaller company. And what we really are interested in is the ratio of every account are similar in those companies. For example, if I'm trying to compare my company to another company in the same industry, I want to know is really my company is very similar to that company. And I would like to put them on the same footing, okay? I have to convert all of them to as a ratio of the total assets. When we do that, the size of the company is not a factor anymore. And then I can compare. For example, is my company really holding too much cash or too little cash? If I take the percentage out of the total assets for the average in the industry, that will be a good comparison. So instead of comparing this balance sheet, I will go to this balance sheet and try to take how many percentage are cash out of the total assets. Let's say it was 2%. So I would say, well, this was below the average in the industry. We just matched that one, but we really increased the cash even more than that, okay? So the question is, why are we deviating from the average in the industry? And that's really calling for explanation. That's almost 6%. So if it's common in the industry to be 2%, why do we hold cash almost 3 times more than the usual account in the industry? Without converting everything to vertical numbers, so every number is percentage of the total assets, it would be hard to compare to companies. Okay, so that's the biggest reason. And many things come out immediately. We saw here, cash is going up even as a percentage-wise of the total assets. And other things you can see immediately, you can see, for example, total liabilities. Wow, total liabilities going as percentage of total assets going down. That means that the company is really paying their debt. You can see it's in the original database, in the original balance sheet. In fact, they are reducing, but not only they're reducing it, it's also percentage-wise. Let's see that. You know, on one hand, in fact, on one hand, the company total assets is going up and the total debt is going down. So percentage-wise, no surprise, we're holding really only 23% after 5 years versus 78% of the total assets. That might be a good signal that the company is really paying their debt and reducing the risk of the company. Is that the right things to do? That's a different question we'll dive into in other sessions as well. But to answer that quickly, depends on the industry. Even in the industry, we have 50% debt out of the total assets. Then we'll ask, hey, why the company is really reducing it too much? Maybe they shouldn't. Because we know if we have debt, interest payment on debt, they are tax deductible. They are advantage to having debt instead of equity. So converting to equity, that's not always the right things. Depends on the industry in which the company is operating. Okay? So if you look at this one, you see really the common stock, it is almost the same, you know, between 5 to 6, close to 6 over the years. On the other hand, retained earnings is growing. That means that the company is keeping probably a lot of their profit and not distributing as a dividend. And that's immediately comes out of this analysis, okay? Let's look at the horizontal analysis. In the horizontal, we are focusing on the change from one year to another of every account. For example, if I'm looking at the total assets, second year compared to the first year, we have a little change here, 0.74%. How did I get that number? So let's calculate. How did I get the second one? Let me show you how I do it on the Excel. I go to the original, the balance sheet, and let's look at it. Let's open the Excel again. And this time I'm focusing on a change in the total assets. How do I make a percentage change in the total assets? That will be equal to, I will take the 816 in the second year, subtract from it the previous year, which is 810. That difference, how much it is as percentage of the original value, which is 810, 0.74%. And we do the same things for every account. So the way I did this one, between this one And this one, we can do the same thing. This minus this, divide by 816, will give me the next. So what is the way we're really calculating this row? This one is the difference between the total assets, the end of 2002 minus what it was in 2001, divided by the amount of 2001. How did I get 21.45? Very easy. We do the same thing. Just go back to Excel again. This time, okay, I'll just copy it. So I will have the formatting as well. I just change the numbers. This time I want to subtract 991, and I will subtract for me the number 816. And then I divide everything by 816. That gave me the percentage change. I got 21.45. And that's exactly what we see here in this simulator. So we learn how to do percentage change in every account from one year to another. No surprise, we don't really have any numbers for 2001 because we don't have the numbers for 2000. Therefore, we're losing kind of this column. Okay? Now, why do we do that? We did already the vertical, and we can see if there is any difference. The another thing is it's really striking immediately. For example, if you look at property, plant, and equipment, well, I see immediately a change from 2002 to 2003. Some things about accumulated depreciation. Other things, okay? We have a huge jump in the amount of cash we hold it. We already know that, but we see every year we're increasing it much faster than the growth rate of assets. And other things, we might have skipped, we didn't really notice that in fact total assets went down in the last year, the years 2005. Here when I see a negative number, it's immediately strike to us, okay? So that's a very important result that we see right away when we do the horizontal analysis. Some things it's very obvious. We see here declining in the total liabilities. Ever since it's negative, it means the company is repaying their long-term liabilities. On the other hand, we see the retained earnings, it's growing every year, and that growth means the company is not distributing too much dividend out of the profit they are making. And maybe what they already do, probably, it's instead of distributing dividend, they are in fact paying their debt. So the share of the equity becomes to be higher than it was before. There could be many, many scenarios, okay? And then you ask yourself, what can I learn, for example, from this negative? Let's look at it, okay? This company has really had increase in total assets, and then and then we do have a small decline. Is this small decline meaning the company stopped growing, or what's the reason? Maybe there was less profitability, and then I just don't have enough money to reinvest in the company. A lot of those questions, and those we can address in relations to look at what a vertical and horizontal analysis for the income statement, and that's the topic of the next clip. See you then. Thank you.